What's up, everyone? All right, so in today's episode, I'm going to walk you through my trades from the morning, and it won't take long because I only took 2 trades today. That's it. One winner and one loser, both very similar setups. Stocks that met all 5 pillars of stock selection. They were moving up. I saw them on the scanner. I jumped in either at micro pullbacks or around a half dollar, whole dollar. We got a little extension higher, but they didn't hold up very well. And this is very interesting to me because these same exact stocks with the same exact headlines in a hotter market, I can't even imagine how much they would have gone up, especially the second one because it had a recent reverse split and a lot of room to the 200 moving average. Yet, the same stock with the same headline in a cold market, crickets. So what's the deal? Well, no doubt buyers are a little cautious jumping into these because we've seen so many round trips, stocks that squeeze up and then reverse all the way back down. So shorts have gotten caught on to that, all right, these are popping up and reversing. They start shorting. So what they're doing is they're creating resistance as the price is going up. Essentially, we're talking about an imbalance between supply and demand. Demand is created by breaking news, the stock being up quite a lot, and market sentiment. So we don't have as much demand right now. But what's worse is that we have additional supply created by all the people selling into the move. Now, sometimes that supply is created by the actual company doing a secondary offering right on the open market, which is awful, but it does happen. But other times it's created by, insider selling. I guess that's a second option. Or third, people who are selling short against the stock. So selling. So now there's more supply, there's not as much demand, and that balance is what's creating the current environment that we're in right now. So if we jump on the screen share, we can start breaking it down. What you'll see is that although we have a couple stocks that are up, they're either on light volume or they're not really something that I considered. So FLYE, this looks like, I'm not even sure. I didn't even see this because obviously it popped up here a little bit later in the morning. Typically, I would say this is probably a reverse split because being up 1,500% is sort of ridiculous, especially with only 48,000 shares of volume. But I'm not certain. I haven't looked at this one very closely. EVOK, this one, look at this chart. The stock pops up and goes sideways. So you know what this is caused by? It's caused by a buyout. So the company has been bought out at $11 a share. So if we pull up the headline on this, you will see the company's been bought out right here at $11 a share. And you might think, well, wait a second. $11 a share, it's trading at $10.73. I don't get it. Why isn't it trading at 11? Well, here's the deal. You could buy this right now at $10.73. And when the company gets bought out, you will get $11 a share for your stock. It's going to take some time. So there's a little bit of time cost involved in buying and holding. So is that worth on 10,000 shares, $2,500? Well, you decide. 10,000 shares is, $100,000. So it's a decent amount of money. And how long you're going to be tied up in it, it could be weeks, certainly weeks. It could even be months. So opportunity cost of deploying that capital somewhere else, it's probably not really worth it. But then here's another variable. What if all of a sudden, for whatever reason, this buyout doesn't go through? Where was the stock trading at? $5 a share? Uh-oh. So this would probably drop back down to 5. So now your downside is like losing potentially $50,000 and your upside is making $2,500 and it takes a month to get that upside. So you can see that that's not really working very well for risk reward. Now, what you could do, and what some traders might do on a higher price stock, is buy an options contract down here. So they would hedge the risk of that very unlikely but possible bad news of the buyout not going through. But then you're eating into the little bit of sort of profit opportunity you have here by purchasing an insurance contract, which would be what the options are. So, all said and done, on a stock like this, EVOK, that doesn't have an options chain, you can't do that, and the risk and reward just isn't really there for most traders. On a higher price stock, you'd have to really look at the individual circumstance and decide whether or not it's worth it. But given the opportunity cost of holding that position for that period of time, it may not be worth it. Okay, so EVOK for me, no trades. Second leading gainer, Ruby. Well, here's the problem with Ruby. It's cheaper, number one, and the squeeze didn't start until well after the opening bell. Now, what's interesting is that it's blue sky here above about $7 a share. So the blue sky setup, and we have scans that are specifically looking for blue sky, that's when the stock is at its all-time high. So right here, all-time high is going to be 669. So above that level, blue sky. Now, currently, we're only at about $1.50, so there's still a long ways to go. It's a fossil fuel company. You can see that right there in the energy sector, subsector. GR, so is that Great Britain? What is GR? It says India, but India is not GR. So let me just Google the country code. Country code GR. Greece. Okay, interesting. Maybe I should have guessed that. But anyways, so I'm sure that Great Britain is the UK anyways, but nonetheless, yeah, so fossil fuels, energy, that can work from time to time, but usually I don't have high expectations for it. In any case, it started squeezing after the opening bell. So because of halt levels now, it's going to be difficult to trade. DENN. Okay, interestingly, is this another buyout? And it is. It's another buyout trading sideways. Now, I will say that if you are really quick on your keyboard, you can sometimes jump in the middle of this candle. And in a hot market, I will. Someone asked me about this today. They said, Ross, well, why didn't you jump in EVOK right away? Because I saw it popping up. I saw it when it was at about $8 a share. So it went up to nearly 11. I could have made money on it. But that would have meant I would have had to jump in without knowing the news. Now, in a hot market, I will bite first and ask questions later, which my dog takes the same approach. But in a colder market, I'm not going to do that, because what's most likely going to happen is I'm going to keep buying these tops and flush, getting a nasty rejection. So for me, I said, no, I'm not going to do that. But if you're using high-a-day momentum scanners, which we are right here, you can get the alert and you can see it and you can jump on. And so that's something that I will do in a hot market. All right, so gosh, well, I haven't traded any of these yet. CAPT, nope, too cheap. TCMD, floats too high, price is too high. HTZ, floats too high at 125 million shares. This is not looking good. KFRC, nope, didn't trade that one, too expensive. UFPT, too expensive. MSPR, too cheap. I'm Goldilocks over here. I don't like any of them. Too expensive, too cheap, float too high, too, whatever. You can't really have float too low. They don't get that low realistically. So, all right, well, let me show you the first stock I traded. ARTL. Yikes. This stock is now red on the day. Okay. It came out with news this morning. It's down 21% right now, but it had news this morning. It's a biotech stock. I like biotech. It started to pop up, had room to 8, which is a 200 moving average. So when this popped up right here, we'll jump onto the 10-second chart. I looked at it, and initially I was like, I don't know. It popped up, it dipped down, and I said, you know what? If it's holding this level, I like it. And I got in for the break of 5, looking for that squeeze up, ended up hitting 550, and then rejecting back down. On this one, I lost $773. I'm going to show you, I'm going to reveal my P&L in just a moment. So I lost minus $773 on ARTL. Got in and stopped as it came back down. Disappointing. And then it just sort of did this slow unwind. So, fortunately, it didn't hold through any of this, but got caught kind of right in this area and was red. So first trade of the day, red. That's not what I like. All right, second trade of the day, ABP. So ABP currently is still up 10%. So at least this one's holding some gain. Biotech stock, again, with news, recent reverse split, 200 moving average is up around $40. So now this is the type of stock that I could usually kind of, wrap my head around. Now earlier it popped up here and then reversed. And when it came up here and rallied back through, I was like, this is great, because what it's proving is that we can get that curl. Now, if you look at THAR yesterday, this one, we'll zoom in on this here. So right in this area, THAR had an initial pop, a fail, and then it curled back up. Higher volume, but a really nice rally. Unfortunately, by the end of the day, this one had also unwound. So, and this was a private placement crypto treasury strategy catalyst, which, we obviously know is not working super well. So THAR, round trip on that one, nasty candle on the daily. Even though it had 50 million shares of volume, it just couldn't hold up. So APB ends up being sort of similar. So I jumped on this one and we got that squeeze through 750 up to 8, up to 850, up to 9. And so I booked some profit on it, but here's the big P&L reveal of the day. $134.15. That's it. Bummer. All right. Well, hey, you know what? Live to trade another day. Be back at it tomorrow. I took 2 trades. Commissions are basically nothing today. So made $100, $134. Again, I don't know. This is I'll ask you here. What do you think? Should I have just not traded today at all? It's hard to not trade, right? But that's discipline. So fortunately, I kept my risk in check. Relatively small size, so the P&L's not too big. It wouldn't be too big if I had won, wasn't too big if I had lost. So, it's kind of negligible. I'm here, I'm breaking the ice, I'm seeing if I can get something working. If it's not, then, giving up relatively quickly. But should I have just not even bothered? It feels like there's such a headwind right now that, yeah, why bother? And maybe, another level to that. Oh, what happened to my camera there? Another level to that could be, should I join the opposite side? Should I trade these to the short side? Now, the thing with trading the short side and what a lot of traders are doing is they're shorting as soon as something pops up. And so even before you see what the news is, right? So same issue with EVOK. In fact, I saw someone in the room today who was shorting and they were red a couple $1,000s on EVOK. It popped up, they start shorting right away. And then, oh, it's a buyout. So it's not going to reverse. Shoot. All right. Well, that's not really the worst case scenario. The worst case scenario is you short something and you get one of those candles where it goes not from 5 to 10, but from 5 to like 50. And we've had a few of those. And that is a scary thing because I'll tell you, I've been trading for a long time. And one of my biggest fears would be that one miscalculation cost me years of profit. And you think that couldn't happen. That could never happen. And it can't happen when I trade to the long side. So right now, my career total is a little over $20 million of profit. It's pretty good. Results not typical, remember. But how much do I have in my account right now? $2 million. So it's a pretty big account. I could be aggressive with that, but I have $2 million and I don't use any leverage. I have no leverage in my account. So basically the worst thing that could happen today is I buy $2 million of stock and it goes to zero. I would lose 10% of my career winnings, essentially. That would be bad. Could I recover from it? Yeah, certainly. It would be hard emotionally, but financially, I certainly could recover from it as long as I could keep my head on straight during the recovery and not get too emotional. Just focus on base hit, base hit, base hit. But it might take 6 months to recover from, or in a colder market, it could take a year or longer, right? So that's the risk. Now, that's the risk trading to the long side. In worst case scenario, I can tolerate that. Now, I could probably take I could draw my account right now down to $50,000 and I could still take all the same trades I took today. So I could take all that money out. I could go put it in, I could even put it in a bond, just earn, 4% over the next year, whatever it is, 5%, right? And hey, that's $100,000, right? So I could do that right now, but I don't want to do that because if I use that buying power, even just one day, and it helps me have a $200,000 day, then that one day paid for the cash to be sitting there. So I'm not going to do that. But if I was trading to the short side, and let's just say I took a $2 million position, now this would be crazy, but let's just say I took a $2 million position on a stock and my average was $10. Maybe it went from 5 to 6 to 7 to 8 to 9 to 10, 11, 12, 13, 14, 15, and I'm averaged in full size $10 average. And then it goes from 10 to 20. So now all of a sudden, this is really scary. What if all of a sudden, in just a fraction of a second, it just skyrockets to $50 a share? What's going to happen is my broker is going to auto liquidate me and they're going to buy $2 million of stock on the ask. And they don't really care that I'm getting an unbelievable amount of slippage. But let's just say they cover me at, $50 a share, or let's say it goes to $100 a share. All of a sudden, we're talking about the unthinkable. And I say this because I've actually seen it happen before. I've seen stocks that have gone from $10 a share to $2,500. Now, they didn't do that instantly, though. The worst I saw in an instant was $10, $15 to about just under $200 a share. But, oh my gosh, can you imagine that? Can you imagine the amount of money you're talking tens of millions of dollars, not just back to zero, on my entire career, but into the negative. That is a level of risk that I just can't even stomach thinking about. Now, you could say, look, hey, as long as you don't have your money in that much money in your account, it couldn't happen. But because you've shorted the stock and created a negative position, you have to buy back the shares, even if they're trading at $200 a share. Now, the time I saw it happen the worst was because of a circuit breaker halt. So the stock halted and then it resumed, and there was no chance to get out. On candles like this, in theory, there's chances to get out, but your broker coming in and auto liquidating, it just may be that they end up taking you out at the very top. And then all of a sudden, you're down. I mean, it depends, of course, how many shares you have and how much money, but, you could be down millions of dollars. So for me, my choice not to short is part of my commitment to longevity in the market, that I've already been here. Well, I funded my first account in 2001, but I've been trading full time for more than a decade, and I want to be able to be here for another decade, right? I just, and it would be so emotionally devastating to imagine, even to think about, let alone it actually happening, giving back everything I've made, everything, because of one bad short, especially if it was on a garbage Chinese company that made no sense. Oh, that'd be so devastating. So for me, it's just not worth it. So that leaves me here sitting, being patient and being disciplined and waiting for good quality setups. Now, yesterday I was up $25,000. Unfortunately, I gave back more than half of it, finished the day up about $11,000. But $11,000 is good. That's green. And if I can get even just a few days a week like that in a cold market, that'll tide me over until things pick up. And so that's the way it is. You just have to batten down the hatches and accept that this is a time. And even if you're a short seller, I mean, however your strategy is, there are hot streaks, there are cold streaks. And when it's cold, you just have to batten down the hatches, slow down, and, wait till things improve. They always do, because these are the cycles. Hot and cold, hot and cold. So you got to get through the cold markets if you want to be able to enjoy the hot markets. And so that's what I'm working on doing here for you guys, hopefully leading by example. So thank you as always for tuning in. Reminder, trading is risky. My results aren't typical, so manage your risk and always practice this simulator before putting real money on the line. And I'll see you guys back here bright and early tomorrow morning, 7 a.m. I'll be live streaming for members at Warrior Trading.